Okay, Sean, hello. Really nice to see you here today. Really nice to have you on, and thank you for giving us your time. So, Sean, as I said, you'll be able to speak about Camino 100 times better than what I can. So for our listeners, please just introduce yourself a little bit. Tell us a little bit more of a kind of a personal part of your story, and also the story of Camino.
Yeah, well, I always enjoy hearing people repeat back what we're doing, just because I think you nailed it. You did a good job, and so for that, thank you. And I'll add a little bit more color, but before that, happy to introduce myself and a bit about my story that you alluded to. So I like starting from the beginning. I'm the son of an entrepreneur that immigrated from Mexico in pursuit of the American dream. And like millions of immigrants like my mom, they pursue entrepreneurship as their only real means of building generational wealth. And so my mom opened over 30 restaurants here in Southern California. And so I can never complain to my mom about working too hard. She managed a lot while being the head of household of 6 children, and I'm the youngest of the 6, along with my twin brother. Unfortunately, my mom did lose her business, and so at that point in time, it was a character building moment for her, but for the rest of our family. And my mom decided to basically pack her bags, remarry, and move back to Mexico. So if you can imagine, for a 12-year-old, that was an experience in and of itself, but it ended up being a blessing in disguise. I grew up in Mexico for a good chunk of my formative years, from 12 to 20 years old, but always ambitious to come back to the US and, in a way, live that immigrant story. And I'm really privileged that I did get a chance to do that and feel that fire in my belly and the uniqueness of what you can do when the opportunities are endless. And I think in many ways, the US is known for that. But in many ways, also, many immigrants that come to the US need help. They need a pick-me-up. They need a support system. And so in many ways, that's always been my North Star. How do I build that support system for overlooked entrepreneurs, which include immigrants? And that was really the passion that has created Camino Financial. Right before founding Camino Financial, I was able to build a lot of experience in finance and investment banking, and thereafter private equity, and then was able to incubate what today is Camino Financial, while both my twin brother and I went and got our MBAs at Harvard Business School. And in short, today, what is Camino Financial? I'll just add a little bit of color. We're a FinTech platform offering affordable credit and wealth building solutions to overlooked entrepreneurs throughout the US. We're proud. Our what I would call our initial Wedge product is an unsecured working capital loan. It starts at $1,500 and goes all the way up to $75,000. And we're able to offer this loan at very competitive terms, resulting in 40% lower monthly payments relative to our competing products. But what makes us even more unique is not just about offering an affordable, well-termed loan. It's also about really designing a product or a credit experience that enables our members, we call our borrowers members, to over time build generational wealth. And how do you do that?
Tell me a little bit about your original MVP.
Yeah, so it's a great question. MVP stands for minimal viable product, for those that aren't as familiar with the term, but maybe your audience is. So, and it's interesting. We started as a marketplace, or effectively a glorified broker. Let's just call a spade a spade, where no one was going to give us money to lend into overlooked entrepreneurs. And in particular, let me double click on our definition of overlooked entrepreneurs, because that definition has evolved a lot in the 8 or so years that we've been doing this. We've been doing this for a while. And so initially we started with very narrowly focused on the US Latinx market. For those that don't know, the Latinx market, we're talking about over 7 million registered business and unregistered solopreneurs in the market. They're of all overlooked entrepreneurs. they're the fastest growing segment in the US and generating over $1 billion in receipts into the US economy. And so it's a very big market. And so from that, close to 1 trillion, excuse me. And so, yeah, very big market, very big market. And so when we look at this market, we saw that there was a very big need for capital for a variety of reasons. There's an immigrant status issue here in the US, especially for those that are undocumented. There's a cash-heavy nature of these businesses. They tend to be smaller. And so for a variety of reasons, it's been hard for incumbents to penetrate the market with affordable terms. And so we really narrowed our focus, but at that point, we didn't have money to move. And so we're saying, okay, you know what, maybe, yeah, at that point in time, it was 2014. And so we were just like, wait a second, look, there's this thing called FinTech out there that's booming. And there's all these online lenders that are started emerging since 2008, stemming from the Great Recession. And effectively, there could be a product to market fit. So what we'll do is we'll try to bridge these two ecosystems, so to speak. There's the underbanked Latinx big business segment, and then there's these online lenders, and let's serve as a marketplace or a glorified online broker and connect the two. And one thing we would do is I'd be able to do two things with our MVP, because as you know, MVP is all about setting verifiable or falsifiable hypotheses. So hypothesis number one is, are we uniquely positioned to acquire this market at a lower cost relative to anyone else? That was number one. That was very important. And then part number two was, are any of the existing products in the market a good product to market fit that measured by conversion, look to book conversion, right? And so if we can effectively demonstrate this too, then we'll see, okay, great. There's definitely a big market need. And also there are products in the market. It's just a function of connecting the two, right? And so what we were able to figure out very quickly in our early days of Camino Financial is that we were uniquely positioned to find this market at a lower customer acquisition cost. So check the box there.
Have you seen this demand for Camino? Have you seen the demand still be so high as it was at the beginning when you first came out and set out your goals with Camino?
It's much higher now, actually. We're growing exponentially. Just to give you a sense, we hit the $100 million mark around last year. We'll be doing, we've since then deployed close to another $100 million. And that was $100 million lifetime loans, like, so since our beginning. And so our MVP was a relatively long MVP. We actually started lending at the end of 2016. And then effectively, by that point until last summer, it was $100 million worth of loans. And just to give you a sense, we expect to get to $1 billion worth of loans by the end of next year. And so we're growing exponentially. And so what has led to that exponential growth? So a few things. One, we're just been able to demonstrate we have a best-in-class product, not just for the US Latinx market, but for other adjacent overlooked markets too. So initially, we were very focused on Spanish-speaking, first-generation immigrant, Latino business owners in the United States. That's where we were 120% focused on. And at one point, we realized, hey, we have a best-in-class product here. And we have a best-in-class product that we believe translates into other market opportunities. Let's give this a shot. And so effectively, that's what we did. And so we very quickly just started.
Was that in 2016, or was that around the
No,
same?
so we actually started migrating outside of the Spanish dominant Latinx segment around. We started trying last year. At the beginning of last year, we really hit a nerve in the market by the end of Q3 of last year. And so just to give you a sense, like 80% of our market was like Spanish dominant first generation immigrant around this time last year. Last quarter, 57% of our growth was English dominant, of which a lot of it was English speaking Latinos, which is a market that's 5 times larger than the Spanish cohort. But a third of it was Black owned business owners. And so we've been able to really demonstrate our ability to translate our market insights into product insights, not just for the Latinx market, but for other overlooked markets too. There is this massive sub-segment in the business market that are called solopreneurs. And solopreneurs, so solopreneurs are effectively, and everyone defines it a little differently. So I'll give you the high level of solopreneur definition here in the US, which is there are 30 million registered businesses in the United States, right? But of those 30 million, roughly 25 to 26 million of those 30 million are non-employer firms. So it's only one employee, which is the owner, okay? So that's a bit more intuitive to understand. However, what's interesting is within the gig economy, there are a ton of these freelancers, entrepreneur-minded freelancers, 1099 contractors, gig businesses, individuals selling their goods through gig platforms that may not have, actually likely don't have a registered business, but they're business oriented, they're entrepreneurs. And so that over doubles the amount. So if we aggregate these two subsegments, we're talking about 60 million solopreneurs in the US, of which 5 million just joined last year, which actually highlights, in my mind, the largest work-life behavior shift in a generation. A lot of it oriented to solopreneurs, and not surprising, this is how we kind of fell into the market. 50% of net growth among solopreneurs are either Latino or African American here in the United States. That's where the growth is coming from. So it's very interesting that we also start catering our platforms around this solopreneur segment. So between these two verticals of growth, we've been able to just really take off.
Did you outsource your MVP at the beginning?
Yeah, the reality is initially we were very focused on you have to be tactical about what you do and you don't outsource, right? So we outsource the hardest part. So when you're a marketplace, the good news is you don't have to provide the capital to directly to the borrower. And so we effectively were outsourcing the capital piece of the business model. What we weren't outsourcing is the marketing and branding of that experience. We weren't outsourcing the onboarding of the prospective borrower. And so all that front end work, we were doing it as best as we could. I mean, there was a lot of vaporware associated with that. I think at that point, I didn't have an engineer on staff. I think I set up the website on Wix and and put a glorified form there that was then promptly emailed to me, and I put everything in Excel sheet. so it was definitely scrappy, just to validate some key assumptions around. And I learned a lot too. I learned all about what it means to set up a website and track conversion of that landing page. What is a landing page? How do you market on Facebook and other platforms and lookalike audiences and remarketing? These were all concepts that I had no clue of, but that was the part that I was owning, so to speak. So I was able to get up the learning curve relatively quickly and effectively become a marketing expert for this segment. And then really, quite frankly, kick the can down the road on the capital piece and really lean on the capital providers in the market to effectively book the deals. And I learned a lot. And once again, eventually we would migrate to the capital piece, which is a very tough part of the business, especially for this segment when you want to price them much more affordably relative to existing products in the market. So that's where a new journey had begun.
As for outsourcing, what is your kind of relationship with outsourcing? What are your hesitations? What are your fears when outsourcing? Because obviously now growing at an exponential rate, I'm guessing even more so you will need to start to outsource. What are your hesitations when you outsource? Do you have any, or have you had good experience?
And I'm going to answer a question with a question very quickly, just I want to make sure I'm answering this properly. So when you mean outsourcing, are you talking about outsourcing parts of your tech stack? Are you talking about outsourcing your development?
Absolutely any, really. I mean, more so, obviously, our audience is more engineers, developers. So more developers and engineers, but actually anything. If you're outsourcing other parts of the business as well, that's also very interesting.
Yeah. So we did use. So okay, let me talk about the development, outsourcing development. I think that's very important, and then we can talk about software and other parts of the business, like in our case, capital. We outsourced capital at the beginning to answer your initial question. But let me talk about the development piece. So yes, we did outsource our development. I found a very strong reference while I was in business school of an outsourced development shop in based out of India, and so I feel like that definitely was helpful in getting the business off the ground. And so we were able to, and we were with them for quite some time. We started in 2014. I was still in business school, so I wasn't full time. But when I say 8 years, yeah, sounds like a long time. It is, especially for any startup. But a good chunk of those, year and a half of that was me in business school, just kind of learning as I was doing and getting a lot of great feedback from professors in the process. And so in that, I found this outsourced development company, and I think that really was helpful in getting our MVP off the ground. And so what's interesting is I see outsourcing helpful in different phases of a startup, right? I think it can, especially for non-engineer founders like myself, I felt that it was a great way of setting up an MVP. So that was amazing. And then there's call it a second stage where you have an MVP. And at that point in time, I feel building in-house is probably more valuable, would have been more valuable to Camino. We didn't fully build everything in-house because we wanted to be pretty scrappy. But there's more, I think, cons than pros when you enter a stage where you want to get a stable environment set up. And maybe this is a function of the shop we were using, but you really, once we brought in a CTO, I would have preferred to build most of what we were doing in-house. And the reason behind that is you want to build a very stable environment for development, and you don't want to. And when you outsource at that point in time, because this is going to be no longer an MVP, this is going to be like your solid version 1, call it 2.0, that you're going to scale for your first, call it, in our case, $100 million worth of loans, right? And if you do too much, if you do too much patchwork on that, you're going to build what's called tech debt. That can come back to haunt you in a real way, right? So you need to be very careful about what you outsource at that point in time so that the foundation is very good. However, outsourcing then has an act 2, which is very interesting, which I ascribe to as well, which is at one point, once you have a very stable foundation and development environment, you can actually bring outsourcing back in, because then outsourcing gives you a lot of operating leverage, especially for specific projects. But at that point, you have a very stable development environment with a very clear protocols and technical counterparts at the company level that can really make sure that any outsourced development is being done in a very consistent way that doesn't create any tech debt. So I feel like outsourcing, at least in my mind, has different places that you could be very effective. And so to that point, there's a very long tail opportunity for outsourcing in development. And in that act 2 of I would call it stage 3 of a development of a company, but act 2 for outsourcing.
What did you mean by you wanted to be more scrappy at the beginning?
And I've learned from it is I think I underinvested in product and technology, even as we were setting the foundation.
So you were talking there about, obviously at the beginning, you went to India, India to get the outsourcing work. Yeah, that's where you approached. Is this an area you still go to, a country you still go to for outsourcing, or have there been kind of other areas, other countries now that you go to, and why?
Yeah, so we don't go to India anymore. That we're actually revisiting that. And to be honest, the main reason why is the time difference. That will kill you. That time difference. So there's different ways of seeing that time difference. There's the positive way of seeing it, which is you never stop working. The wheels are turning. Development is happening literally 24/7, right? Or give people a weekend, but at least during the week, your development starting, call it on a Sunday evening, our time, things are going all the way to Friday in the afternoon. Like talk about productivity, right? And so if you know how to set it up, right, I think the productivity levels can be very high, and you can effectively give your team work, your outsourced team work to do while you're, quote, sleeping or gone, right?
You have to be quite prepared for that, though, don't you? You have to be very well prepared in order to get that work ready ahead of time.
Remember when I talked about there's a big act 2 for outsourcing, which is it's a long tail opportunity. Once you have a very good development environment, then of course you can do it in a really thoughtful way, but you need to be ready for that. And so in many ways, we weren't able to take advantage of that benefit. The con is, you can really burn out your product and development team if you're not set up for it with the time difference. So then, answering your second part of the question, where have we looked since then? So right now we're not quite at that act 2 of outsourcing. Right now we're actually still solidifying and building a lot of depth in our internal team. We're hiring engineers and product and data science professionals like crazy right now, and that's really, once again, a function of getting that foundation further along. I think we're much better than we've been historically, but we actually want to build a very large team of by the end of next year in the range of 70 engineers, product and data science professionals. So
how many we're so far at the moment?
We have right now in the range of 20.
So wow.
It's a lot.
Lots of work.
A lot of work to do, over tripling the size of the team. And so we're growing that very fast. And once again, that's also a function of the inflection point of our business. As I was telling you a little earlier, we really didn't start hitting that inflection point. We started in 2019, but then the pandemic hit in 2020. And then it was survival mode. And then 2021, finally, we started hitting that inflection point. And now we are, the good news is, and what I tell a lot of our engineers and data scientists that are joining is like, you don't have to worry about product to market fit with this company. We've found it. At this point, we're building beautiful systems for scale. And the opportunity is there. It's just a function of really working and collaborating to build that infrastructure for scale. And then over time, you can white label that solution and sell it externally. I mean, that is part of our platform expansion strategy. And that's something that people are really excited about as well.
Why is the internal team so important for you at Camino?
Well, It's to the same point made a little earlier. I think they're both important. So we talked a little bit about revisiting India, right? And we plan to do that because there are actually a lot of really good data science professionals out in India. And so now some of it may be in-house, some of it may be outsourced, and there's always a hybrid, right? But effectively, we also acknowledge that it is important to build a team in-house because you're going to be able to create a more stable environment that's more agile when it's in-house, from a foundation perspective. And so that's why building that in-house capability is important. However, you will lose some of that agility if you don't rely on outsourced development capabilities, specifically as you think about even specific project level development and needing to do it relatively quickly. And so from that perspective, there's a balance of how agile you can be at different points in time. I just think, today in particular at Camino Financial, we're in a place where we're just going to, we're at a stage in which building more of that in-house capability is given the stage of our growth, and the foundation building that still needs to be done at Camino. We just believe that building that in-house will be more efficient, once again, with an eye towards leveraging outsourced opportunities as we enter that next stage of our growth and development.
So you say that, let's talk a little bit about team, yeah? So you're talking about here, when hiring, yeah? So when hiring at the moment, it's very, very difficult to find the experts, very difficult to find the engineers of not just an engineer who has the skills and qualities, yeah, but an engineer which you can grab that hasn't been offered a job from any other position from any other place. You're obviously, one of the ways that it seems that you're approaching it is by saying, look, don't worry, we've got our product market fit. You are able to concentrate on this. How have you been at Camino? Have you been tackling this issue of finding the engineers, convincing them to jump on board? And also, I mean, not just a few engineers, let's say another, 50 engineers you're looking at. How are you approaching that?
Yeah, so as cheesy as it sounds, lead with mission. There are a lot of engineers that care about the issues that we're tackling here today at Camino Financial. I think it's hard to find a startup that's generally trying to make the world a better place. We're not just recruiting people to build another feature in an app. We're recruiting top technical talent that can enable us to empower a community. I read this shirt the other day of an engineer that said, coding is a modern day superpower. And it's true. And if you can use that superpower for good, that is a blessing in life in general. And in many ways, I think there's been a lot of social distress here in the United States, in particular around our Black and Brown communities. And I think there's a lot of engineers that are looking for opportunities to make a difference and use their superpowers for good. and so yeah, we lead with that. Number one. Number two, we're really focused on offering competitive compensation packages. I think that's par for the course. And then three, we need to create a flexible and productive environment for engineers to work in. And productivity, I think, is important, but flexibility is equally important. And so our engineering team is fully decentralized. While we don't lose sight of the importance of creating that sense of community and engineering culture. And so how do we convene our engineers with some, and this is something in the future of work life that we're still figuring out, but we're committed to create that community and that ecosystem where we can convene even in person with some reasonable cadence so that we can build those relationships too. And I think that dynamic's not for everybody. And hiring a great supporting staff to help recruit. So we just hired
I wanted to ask you, what is the key to your retention here? Yeah, so you're saying that people aren't leaving Camino. You've just said that you're a recruitment manager. Yeah, so he is the one that kind of helps build that kind of feeling of staying together. People want to stay, be a part of the team. But how do you keep them to be a part of the team, especially if they're not centralized, especially if they're decentralized? How is that possible to retain so many people and keep them happy with what they're doing and focused for the same goal?
Yeah, so Ashley is our recruiting manager. She's more focused on bringing people, wheeling people in. But Eric really, I would say 50% of his time focused on people management. It's not, and the other is architecture and very limited coding, because that's how it should be, right? And so he is constantly, one big mistake people make when really working with best-in-class or trying to build the best-in-class engineering team is that and I feel like the technically led companies don't make this mistake, is that, but I'm not a technical founder. So I really lean on Eric to make sure that engineering feels intimately integrated into our product strategy. I get it. We need to disaggregate strategy from development. I actually do believe in that, but it's important that our product and engineering inform strategy, and it's not just a one-way street where here's a strategy, go and build it. And we're really leveraging that influence of our engineering team to build a best-in-class products. And I define products broadly, right? It's not just the loan. The loan is part of what we call our financial core, and the financial core is what enables us to process and price loans as efficiently as we possibly can, right? That's our financial core. That's the pillar of our product strategy. And if you define that product more broadly like that, then it gives a lot of space for engineers to weigh in on how that can be built and how it scales. And that's I think a key part. Number one. Number two is we're very active about communicating that strategy too, not just with a very frequent cadence of communication with my direct involvement, but also Eric does a spectacular job even every Sunday on the weekend, sending a very long weekly email about, hey, what happened this week in product? What happened? How did we do? Measured by the KPIs, but what's going on in the strategy? Is there any potential? Everyone feels annoyed when there's scope creep and they didn't feel that they were involved or didn't see it coming. He's really making sure that every engineer, product, and data scientist at Camino Financial is very well informed about how things are evolving, even from a strategy perspective, and giving people the space, once again, to weigh in every part of that evolution. I think that's very important.
So obviously, startup, you've been going for 8 years now, so obviously it's quite a long time. Is there such a thing as a work-life balance for an entrepreneur, for anyone who wants to be part of a startup? And should there be? Is there?
Yes, 100%. So let me be very clear. And I'm going to give, let me give you more context of my background and my view of work-life balance before I answer this question, because I've come a long way. Okay. My mom worked her tush off for over 20 years in the restaurant business, and for those that know of the restaurant business, it's a very unforgiving industry. You're living in the kitchen, so to speak. And my mom opened over 30 restaurants. I mean, just to give you a sense, while being the head of household of 6 children, my brother and I used to fight over who would get to sleep in her bed at night so we can see her. That's how hard she worked. Okay. Number one. Number two is my career started in investment banking, the industry of the infamous 100-hour work weeks that happen all the time. There was no such thing as weekend. What do you mean weekend? And you're putting in over the weekend 16 hours, right? Or plus. And so, and look at I think everyone says, oh, every week's 100 hours. For some it was, you have tendencies for 100-hour work weeks. It's not every week, but nonetheless, really taxing environment from a work-life basis. And so when we started Camino Financial, I do think I brought a little bit of that mentality to the workplace.
100 hours kind of.
Yeah. Not 100 hours, but I had limits, but definitely not a 40-hour work week for sure. And some expectations that people make themselves available over the weekend if necessary, right? And I feel like what I realized very quickly is that it's unsustainable. It's unsustainable for me, and you need to learn how to shut it off and recharge, and choose your battles. And I know, by the way, for those that are hearing me, entrepreneurs, I know that it's really hard to pull off in the first, call it, stage of your development, because you're wearing so many hats. The opportunity cost of slowing things down is too high. And so I know, like, it sounds like, yeah, sure, find a way to turn it off at the beginning. It's really hard to do that. And so I do think people that tend to join earlier need to be a bit more mentally prepared that finding that balance is going to be harder, right? But I've also realized that second, third time founders that start companies, they're really good at even creating that balance environment. And that's just experience. They know how to get people focused on the right things.
Done the 100-hour weeks.
Yeah, they know how to do it. And so I know, if I had to relive those early days again, I would have been able to do it a lot more efficiently. The way I describe it now is it comes in spurts. It's typically outcome based, and you do need to hit tight deadlines. And so you'll find yourself working, yes, I don't think anyone's done in a very long time 100-hour work week at Camino. But let's say you'll have spurts where you're definitely working well above 40 hours. I think it's fair to assume. And then once you're done with that spurt, you delivered, you got the outcome or not, and you're iterating through it, you'll have, call it, a rest period, number one. And that may include, and so that's, I think, number one. Number two is you need to really respect people's time off and encourage people and police vacation time. I think that's really important that you also, because you're never going to be below 40, that's for sure, but it may spurt up based on, the demands of the business. That equally means that you need to give a lot of flexibility on where people work when they're experiencing that, one, and two, when it's time to take a break, take that break and don't mess with people.
Give me, what is the most valuable thing you had learned from Harvard, which you have now put into your startup, into Camino?
Yeah, so I've learned a lot. So let me answer the question directly. I've learned a lot in the context of business frameworks that help me frame my thinking and decision making. I think in business, it sometimes feel like because business is imperfect and the information you're getting is not perfect and it's not as clean, it's easy to be tempted to shoot from the hip. It's easy. And I'm talking about like anything from, of course, measuring an opportunity in unit economics. What does that mean, right? To how to read people in behavioral science.
You're talking about empathy.
Empathy. There, like right now, initially I was all about learning the finance piece of the business and quantifying opportunities and measuring success, to now the stuff that I'm reading is all about behavioral science. Right now I'm reading a book called Atomic Habits. It's awesome. And I'm reading, and so there's also The Power of Habit and so forth. So there's like all these books that you're like, whoa, you start learning how to, in a way, better empathize and better manage your emotions and your behaviors to get the best of people. And so in many ways in business school, I feel that it introduced me to frameworks that I use a lot. I'll give one author. Unfortunately, he's a professor of mine that passed away a few years ago. His name's Clay Christensen. And he has, there's this book called Innovator's Dilemma that covers most of the frameworks that he taught at HBS. That's probably of strategy. A lot of people talk about Michael Porter, and his 5 forces. And so Michael Porter has really brought strategy to HBS. I think Clay Christensen has done a spectacular job as well, and his theories are just on point. So Innovator's Dilemma, check it out. That's like my Bible for framing strategic decisions.
What kind of trends do you think is going to kind of be occurring this year in the fintech market? What kind of trends?
Ooh, that's a good question. So I think the trends are, one, we're going to see a lot of, so there's this talk about Clay Christensen and theories. There's this concept of bundling and unbundling of financial products and services. And so in the last 10 years, in many ways, we saw a lot until recently now, but call it phase 1 of the fintech boom was actually unbundling a lot of products in the market. Like credit, for instance, was a big unbundle that banks were just not well positioned, especially stemming after 2008, to offer credit to small business owners. And so you saw this unbundling of these products and services at more affordable, flexible rates than what a bank could offer, right? And so in many ways, I think we're starting to see the rebundling of a lot of these products and services in the form of neobanks or super apps, whatever you want to call it. And then the only sub-bullet to that is a lot of these bundling of products are designed around specific market opportunities. And so one that Camino Financial is focused on is the solopreneur market, but there's also other markets are focused on your Gen Zers, and they don't have a bank account yet, or at the point in time where they're barely becoming banks, so they get in there a little early, and they the user experience is very different from a Bank of America account, for instance. So that's one. A second other big trend is I think credit and the delivery of credit as we traditionally have seen it will be very different in the next 5 to 10 years. One big term I'll throw is called embedded finance. So you're probably engaging with credit without you really noticing it, whether you're buying a Peloton bike and using a firm to finance the purchase of that bike and making monthly payments, because otherwise you'd have to pay for that bike all up at once. And these financial products are being embedded into the experience, and you're really not realizing it. And then the third big trend, and it's a trend that I'm carefully monitoring, is this concept of DeFi, right? Decentralized finance, and the role that crypto and blockchain have in offering a more decentralized financial ecosystem to access products more affordably and securely. just given the decentralized nature of how these products are being offered. And there's so many different emerging use cases. There's still a lot of unknowns around how it's going to get regulated, which effectively centralizes it. But that's a space that I'm equally very excited in monitoring.
What is the best advice you have ever received, which you can give to our listeners?
Best advice that I've received
in order to help Camino thrive.
Yeah. I think in many ways, and it's an oldie but a goodie, but be patient. And I think in many I remember hearing this across multiple different dimensions, including my mom, which is be patient. Success is not there's no such thing as overnight success. And I think sometimes we get very distracted with, especially in the startup world, of that these case studies of overnight success. And all that company went from, being worth $50 million to $2 billion, presumably overnight. And I think the harder the pain point, the longer it takes to build structural solutions to address that. And that means that it takes time. And so be patient, be resilient, but also always be learning in the process. Because once in many ways, people think of luck as the intersection between, you being prepared and timing of the opportunity, right? Mm-hmm. And you just need to, when you see that intersection, you need to be there to capitalize on it. And those opportunities don't happen all the time, which is why you have to be a little lucky. But you also equally need to be prepared to tackle them when they present themselves.
Mm-hmm. Sean, very, very nice. There we have it then, guys. So basically, being patient, but being prepared to work hard, being prepared to go at it, being prepared at least at the beginning to put in those hours. It's not a 9-to-5 job, yeah, and no startup is a 9-to-5 job. But there has to be some kind of work-life balance as well. Sean, thank you very much for your time today. It's been very, very informative, very interesting as well. And I'm sure our listeners are absolutely going to love this episode. Thank you very much for joining us today.
Oh, thank you for having
me. Hey guys, I hope you enjoyed this video. If you did, be sure to press the thumbs up button below. Also, subscribe to our channel to make sure you don't miss out on any future content coming your way in the near future. Also, I really want to know your opinion about this episode, so be sure to leave a comment down below in the comment section. Okay guys, that's all for now. See you soon.